We have gained again when it comes to the NSE 20 today, 0.4% in the green. On Friday, we saw a gain of 0.65%. And it seems that the negative trend has now turned around. Do you think that it's here to stay? Do you think we could see upward movements from here?
Yes, definitely. We should be expecting some upward movement, especially if you look at the stocks that have been going up. Most of them are the ones that are expected to be releasing their results soon, such as Kenyan Power, expected to perform very well. And that, I think, should continue driving the market forward. Again, also, as you had mentioned about the shilling exchange rate, we've seen also agricultural stocks moving up. Bearing again on the fact that tea and coffee prices were performing very well up to this year. So that, I think, should definitely be reason for expecting better performance.
Well, just looking at the central bank's intervention when it comes to the shilling, because they are trying to cap the gains and they are trying to ensure that the shilling and, of course, Kenya remains competitive, especially when it comes to the European Union. Is this going to be reason enough for most investors to perhaps switch into other sectors, perhaps into the tea sector, the industrial sector in particular, because one can expect a relatively stable shilling?
Definitely. I think, companies that are mainly on the exporting side, agriculturals, for instance, and also industrials that, have an export base, should definitely, fare better in the environment of a weaker shilling. So I think as we move forward, we actually expect that these companies are going to see a lot of trading, and of course, with the expectation that current conditions remain, then we should expect good things ahead.
Because banks were one of the most favorites stocks over the last few months. Do you think that investors are going to, in particular, perhaps dump banks and rotate into industrials, or do you think that banks are going to remain a favorite?
I think banks are very unique in one particular element compared to say industrials and commercial and allied, in the sense that they are not directly impacted by, let's say, export issues or import issues. So I think moving forward, I think they are likely to still continue being the favorites, especially bearing in mind the fact that interest spreads have actually gone up, in as much as lending rates have come down slightly. But cost of deposits has also gone down, so that means we are looking at wider spreads than we had same time last year. And again, also on the basis of bigger lending, bigger loan books, we expect second half to be very, very good compared to first half. So banks should continue by and large being the market favorite.
Looking at the yields when it comes to the bond market, we have seen a significant drop in those yields because of all the active buying. But today in particular, we saw the bond market coming under slight pressure. In other words, we haven't been seeing a lot of trade coming through, and this is ahead of the new auction rules set to be announced on Wednesday. Do you think that we're going to be getting a surprise from the central bank?
The market basically will be waiting to see and to watch and see what the central bank does. But by and large, I do not expect that the central bank will spook the markets more or less, especially in line with the vibrancy of the bond market in recent weeks or recent months, and plus also moving forward in terms of how much money government is expecting to raise from bonds. So I think the last thing that they would probably want is to send some adverse signals to the market. So by and large, I think it should be news that investors should be able to take with comfort.
Looking at the overall market now, clearly there is a lot of value to be found. We were talking about where to from here for the NSE 20 a little earlier. Just looking at some of the value that can be found on the markets, where would you be putting your money right now? And obviously you'd want to catch the upward momentum as well when you are investing in various stocks.
Number one, I would still go for banks, again on the basis of better spreads and bigger loan books. And number two, would also look at commercial and allied, very good activity expected there in line with good corporate performance. For instance, media companies rebound in advertising spend and the like, expected to boost their earnings moving forward. I would also look at industrials, though on a selective basis, and looking at the ones that are likely to benefit from a weaker shilling, the opening up of the East African common market and so on. So yeah, those are the key areas that I think would be looking at currently.
One of the reasons that we did see pressure coming through for the markets is the notion of the telecoms war that has been playing out for some time now. Do you think that those fears have now been allayed, that some normality is going to return to the telecom sector and thus feed through into the equity market as well?
I think by and large, looking at the performance of Safaricom, for instance, I think the market has more or less factored in that information, and I think the volatility that had initially crept in is not likely to continue, at least not in a very, very drastic sense. So, well, I think, again, it's still early to say which direction the price wars are likely to take. And of course, there's always a feeling that it might be too early in the day, and there might be other events that might unfold that might change the equation. So I think, but by and large, I think the adverse volatility that we saw earlier has more or less come to an end. So, well, we can only wait and see what happens in the weeks ahead.
Isaac, in terms of trade for the rest of the week, again, we've got those rules set to be released on Wednesday. What is going to be driving markets for the week ahead?
I would say, again, companies that are expected to be announcing, one of them is actually Kenya Power and Lighting. The year closed in June this year, 30th of June, so the results should be coming out any time. And of course, it's expected that they are going to post very, very strong numbers, earnings growth, and dividends as well. So I think, and again, agricultural stocks, again, on the basis of the weaker shilling, those should also elicit a lot of activity moving forward. Plus, of course, financial.